What's good, family? It's Mike back with another video, and in this video I wanted to show you guys something very simplex. Shout out to all my beginners out there, especially because this video is going to be excellent for you too. If you already know about what I'm going to talk about, I mean, that's a plus. That means you're going in the right direction. Price action, man. Price action is very important when you're trading. And in this video I want to show you guys the easiest price action strategy to the point where you can understand when to buy and sell within the market, when to look for your opportunities appropriately. That is going to be extremely important when you're trading, and making sure you're establishing that foundation and that understanding of how to basically analyze the market without indicators. I'm going to show you guys how you can make money without indicators in this video too. So without further ado, before we even get into the good stuff, you already know what to do. Can you please comment, like, and subscribe? Turn on that notification bell to become a part of my notification game to know when I post new videos. Good content, great content every single week. So don't miss out on it. And let's not even waste no more time. Let's get right into the video. All right, family. So first off, we are on Aud USD right now. This is a very smooth pair. I don't know if whoever's new on my video right now, if you never heard me talk about Aud USD before, this is actually one of the simplest pairs to trade, and it's literally so smooth. They'll give you the smoothest moves. It is slow pace. It is very slow pace, but because it's not that volatile, but it can still give you a lot of money. You can still get a lot of money off this pair. You see that was a 100 pip move just from there to there. Like, even if I were to measure it from here to here, 84 pips. See, this would have been about like 200, 300 pips if I was trading like GJ and GU and all, those more volatile GBP pairs or whatever. But I want to show you guys. I already actually got this marked up. You can see, and you see I'm on the daily chart for all my beginners. The higher time frame is where you want to start. Even if I went to the weekly, we can still get an understanding of what price was doing in this particular area. This stuff is very important, man. It's very important because when you can tell where price is going, it is in an uptrend just from me looking at it. It is in a heavy uptrend, and we can see it in the little example. Price is in a heavy uptrend. So that's important in itself. So automatically, boom. That's the first thing you want to do. Identify the trend. Identify the trend of the market. And when you identify the trend of the market and you have that directional bias off the higher time frame, because even if I were to look over here and start drawing up little areas, just to have that direction, just to have that bias on what price is doing constantly, is going to be extremely important when you're trading. Because first off, you want to be doing that. You can see if I drilled up high, price is making a series of higher highs and higher lows. Like, you can really see what's going on. You can see it. You can legit see what's going on, and it's constantly going up. It's constantly going up continuously. So this is very important, especially because you can really see what price is doing and if it's going to continue to move in your favor and help you continue to get moves along the trend. This is what they call a trending market, okay? Trending market, I always tell people, price can only go three ways. Price can only go three ways, okay? Price can either go up, price can either go down, or price can either go sideways. Look at that penmanship. But you can see it, and you'll see these all the time, guys. Like, this is nothing new. In an uptrend, price will be going upward, making a series of higher highs and higher lows. Oh, my bad, guys. My penmanship, man. My penmanship. Higher highs and higher lows. And in a downtrend, price is making a series of lower highs and lower lows. I don't know why it's doing that. Like, it won't let me draw. Come on now. Do it for the video. Do it for the video. Uptrend, downtrend, right? Very, very simplex. And I go over this every single time. I've drawn it so many different ways, but I feel like just you guys getting this visual is gonna help you understand what's going on. And I'll just write it out just in case for the beginner. Uptrend, and then you have downtrend. Very, very basic terminology, basic retail terminology. You know what I'm saying? Like basic retail terminology. So everything is here, literally. Uptrend, downtrend. And a choppy market looks something like this. This is what, when people say stay away from choppy markets, this is what I mean. When I say market can go up, down, or sideways, this is exactly what I mean. So even if I were to come over here and draw like, I'm going to draw like a little, how about a little, where's the parallel channel so you guys can actually see this. And I'm doing this for a reason. I want to draw this up before I even get into the good stuff. There we go. My mic is in the way. So I'll go over here. Right there. And make sure this thing is. That's my parallel channel not working. Let me go over here. The good old horizontal lines, right? Now I got different colors on these guys, but it's all right. Demonstration. And then this is the choppy markets that, you know what I'm saying, you just want to be aware of when you're trading it, because this is like, this is what they call a consolidating market or range of market. It keeps doing that. Golly. There'll be a little light on the. These are the kind of markets that you are dealing with. Up, down, and a sideways market right here. And this is actually I'm gonna put a text right here so you guys can see too. I'm just gonna call it choppy market. So these are what you want to be looking for. The uptrend and downtrending markets. A trending market is a friendly market. I'm gonna put that down. That's a gem. A trending market is a friendly market. A trending market is a friendly market. And I want you guys to really, really remember that. A trending market is a friendly market, because in a trending market, you know where price is going. In a choppy market, you don't really know where price is going. You're seeing a lot of wicks, a lot of indecision areas where price is constantly fluctuating within that area. So what happens to people is usually they'll get in the middle of in the middle of a choppy market, and then price will go against them. You may get lucky and price may go in your direction, but you won't be able to make the most money. You won't be able to catch the most amount of pips, depending on what lot size you're using or what kind of move you're going for. If you're going for a short move, it's a nice small move, get your money and get out. It depends, but still, you can still take entries in these particular areas, like around here. But you want to be either at the bottom or the top when you are getting in at these little areas. You want to be either at the bottom or the top. And this is so important, because understanding this is really going to help you, because even if you're that person, you get more skill, you get more advanced, and you don't mind getting in to a choppy market, you still want to get in at the very bottom of the market or the very top. That is so important. This will all come together in a few minutes, because we're literally going to get into the charts. But I wanted to draw this up for you guys. I literally thought about this firsthand. I should have had this before I made the video, but I wanted to just go ahead and do it, because I feel like it's going to help people a lot more. Very, very important. Easiest. This is literally the easiest way to do it, man. Easiest way to do it. Take your buys at the bottom. Take your sells at at the top. And still this goes back into play towards an uptrend or downtrending market. Really still having that directional bias. Like if price is choppy in a certain area, on still still in an uptrending market, it's just consolidating in that particular area of price, or where price is. If price is just consolidating in that general area, then, and it's an uptrend in general, just go ahead and take a buy at the bottom. If you're comfortable with that, you're comfortable with just taking a buy, just chancing it, and putting your stop loss behind this level, you're fine, and you can just take it to the top and take profit. Or potentially price may end up coming and breaking through and going up in that direction. That could possibly happen, or price could literally go down, continue to retest, and go down our direction. So you want to take all of that in consideration when you're trading in a range. And this is very, very important to understand. You know what I'm saying? So if anything, definitely remember this. Now we're definitely going to go into the price action part. So like I was saying earlier, in this market, price is making a series of higher highs and higher lows, okay? Price is doing that. Price is continuously doing that. And we can see where it's going. And because of this, we want to go to the 4-hour chart now, and we want to really, really analyze the area, okay? Price is making a series of higher highs and higher lows. So these are your areas to get in. Even if you do the line chart, you can see break, retest, 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 retested this area. It retested this area. And you see another structure area right here, but I'm going to get into that. But I just want to show you guys the movement. See? Break, retest, came up, stayed in this middle of this area, retested it. Boom, retested it again. It retested this area that was once a resistance and is now formed as support, and it's going up to the next area. And then same thing with this one. It came through, retested the area, went up, and this one just broke right through it. Break out of this area, break out, and then hit the top, came down back here. And sometimes it won't get as close. There's actually an area in this area that I actually didn't have marked. If I would have moved it up, I could have done that. That is another area. There's actually two areas in that. I'm not going to go back in the past. But boom, it hit the top of the resistance, came down. Boom. You can see it's just like a, oh shoot, my bad guys. It's just a pattern, man. It's just a pattern. It's just a pattern. And this is something that's continuously happening over and over and over and over and over again. Over and over and over again. You can see, even if we go down to the 2-hour chart, and this is how I really analyze it. The lower you go in the time frames, the more candlesticks that you're going to see. The more information and the more data that you'll be getting, and you can see what's happening. But still, it's saying the same thing. Look at this. Look where price has tested. It's tested this area. It tested it. It tested it. It tested it. Tested it. Tested it. Tested it. Tested it. And then it finally broke free. See that? It's like it stayed between this zone and then until it went to the next zone. And I know you guys see this little area right here that it was also rejected, but this is another area of interest. This is another area. If I wanted to, I could just mark this area right here. And you can see it actually broke through this level, came through, retested it right here. It came up, hit, then retested this level again. So this was a resistance and support right here, and it was retested. This area resistance was retested right here, and it was also retested right here. Those wicks, when you see those wicks, that means price is testing that area. Wicks don't just happen just randomly. Even if we go to the 30-minute, you can literally see it, and I'm literally just going down. This is how I firmly analyze the time frames. This is how I do it every single time, because it just helps me understand where price is and where it's going. if price is continuously hitting the level multiple multiple amount of times, it doesn't want to break that area. And this one, you can see it broke free. This was that resistance that was here, and then finally it broke through. We had a breakout candle right here, broke through that resistance, organized a new support, and now we are in a new area right here. And it did end up coming right here, came down, and still this is the area of price action right here too. Even I could have marked this. This is on the 30 minute. I could have marked that if I wanted to, and this just would have went all the way over here. And you see it did form a resistance right here, but it just retested this level. Gotta zoom in for y'all. See, it sold, and then it came up right here, and this is actually an area of a structure right here. Let me take this off so you guys can see what was happening. Right here, this is actually an area of significance. Came through, hit, broke through, retested it, and then it went up in that direction. Hit the resistance, 4-hour resistance. It was rejecting this area, but finally decided to break through it right here. And then it came back and retested the area right here, and it ended up going in our direction. It's okay if it's a steep retrace. You're still fine, even though it came down here. Some of you may be like, okay, well, I see an area, what I'm saying, right here. I see an area right here. Like, well, what? I mean, I'm confused. What's going on? I mean, you can see, even if when I drew the line all the way over here, it did come through this area, retested it, tried to sell, didn't, and then it came back up and then retested the area. But this whole area is testing this area right here. Man, this line is, let me just move this for a second so you guys can see, man. Let me just move this down for y'all. Or let me draw the line. Right. Let's get the line chart. Right there. See that? Sorry about that, guys. See that? Resistance, support, support. And you can see that's a continuous pattern because that's what it ended up testing. Came right back down to this area. Don't worry about so much on this jump, because even on this, you can see this was a fake out. It did not go through and continue down, because if it did, both of these candles would have closed at the bottom. That third candle would have formed, and we would have just went back down to the bottom of the range down here, which you could have taken stop loss behind here and then went up in that direction. But don't get scared if it if it pulls back like this. If it pulls back, if price pulls back down here, and let me just do this for y'all. If price pulls back down there, there's a reason. Don't just think it was just random. There's a reason price did that. So automatically, I would have known. I would have said like, okay, listen, I'm seeing structure. I'm seeing prices in this little area. Well, it just came down right here. So what is it retesting? And I would have drawn something like that. And that's why I put it there. See, this was a resistance, higher high, higher low, and then it broke through, retested, came up, and it came right back down right here and retested this area right here. You can see if I could have drawn another one right here. This is how you have to analyze the market every single time. Every time the market stops at a particular area, it's not just for random reason or just a cause. It is testing something. Always keep that in mind. When price gets to an area, it is testing something. If price is having trouble getting through an area, it is testing something. But still, you want to understand that you're still inside a structure regardless. Like, you got to understand. That's why the uptrend and downtrend is so important. You got to understand what price is doing and where it's trying to go. And you see this whole dilemma was still, even though all of this stuff was being tested, it still stayed within our directional bias of an uptrending market. Still stayed above that trend line, even though all of this got retested. Previous previous resistance that was over here was retested, and you can see that, and then it ended up going up in our direction. So that's why the Fibonacci actually goes into play as well, because you can kind of get an idea on where price is going to pull back on. I did a video on that. Definitely check that out. Very, very useful information. But this is how technical you got to get with the market. Very, very technical. And I'm not even going over the candlestick analysis. Like, you want to understand all of these candlesticks and what's going on. See, this was an engulfing candle at first, but then this candle closed like this. So then it made a Harami pattern. This is an engulfing candle. Right here, you know, I'm seeing all of this. This was a pin bar right here. I'm seeing a lot of buyers in this particular area. But still, this is pretty high in itself. I still would have waited until price probably could have came down here to retest this level, which would have gave me a nice opportunity towards the upside. I could have targeted this level, this high, or I could have just targeted past it. It's just your potential preference at that particular point. But I'm seeing all of this. You got the tweezer tops right here. You got a pin bar right here. And price is constantly coming to the level. This is actually where I probably would have got in, right here at this level. Right there. Or even if I wanted to, I could have got in here, because literally, I'm seeing that sellers really aren't in the market. This was like a short little counter trend. And that's why they use the resistance, or they use the trend lines for extra confirmation. You can really see what was going on. You can see that. They use the trend lines for extra confirmation. Very, very useful. You can see this off the bat from what's going on. See that? This is a small little retest in that little area, small little retest. So this is how technical you got to get. See? If I go to 15 minute, you can see that. See? Came through and retested this level. Tested it clean. Different structure on the 15 minute. There's more data, but you can still see what was going on. Price bounced. Price bounced. Price ended up bouncing and going in our direction. And that's a nice little W pattern. See that? So this is the kind of stuff you want to look for when you're trading, man. It's really, really going to help you. I'm telling you guys. Break and retest is powerful. Break and retest is powerful, man. It is powerful, powerful, powerful. And it's just going to give you extra opportunities. There are so many areas where you could have made money in this within these moves. And if you haven't seen one of my videos, especially in the uptrending market, you're getting in on the higher lows that are being created. So that's very, very important. Very, very important. And what I'm going to do here, I'm going to go to 4 hour real quick. So remember, guys, break, retest. Get in. You're getting in on the higher. Your main strategy is to get in on the higher lows, the higher low levels that are being created within an uptrending market. And in a downtrending market, you're trying to get in on the lower high levels to get in. It's like you're trying to hop on the train inside of that trend. You want to continue with the trend. You want to get in the market with the trend, and that's the most important thing, especially. And I know you can see a lot of wicks and a lot of things going on, and I'm gonna take this off. This is why I kind of like take it off sometimes, because me personally, I can see what's going on. But you see, you know, this was just going up and down for a while, but still, you know, I can still see what's going on. Even if I were to draw a little trend line right here in this little area, price is still staying within an uptrend. It's small in this area, but it's still making higher highs and higher lows. This is still a higher low because it's with this area. I still count that. This was a lower low compared to this, but still, it's still higher low right here. See this? Still staying. This is why the trend. That's why they use the trend lines. Higher low, and it's still going up. Higher lows. Look at it, still going up. Even though they're still in this area, I still know where price is. Higher lows, breaks, retest, higher lows, going up. Breaks, retest, higher lows. And it just keeps going on. It keeps going on. This is generically what happens. So we don't know how price is going to go. We don't know how. You never know how price is going to go. So that's why it's good to have runners. This is why it's good to have, when you have one trade you make your money with, and you just have another couple of trades that are just running constantly. Because even with this move right here, when price finally decided to come through, break, retest, like literally, if you would have got in off of this after this pin bar, after that pin bar right there, literally you could have got in after this candlestick closed, and then you could have held it 300 pips. So that stuff is extremely important, man. That is extremely important when you're trading. Even up here, this is a big confirmation up at the top. We had nice confirmation up here. I'm gonna put that right there. This is a tweezer top. They call it the tweezer candles. And then you could have gotten on the second candle, and you could have been able to take this down. And all of this was basically showing. I know this was definitely showing on the daily. All of that bearish momentum right there is not for no reason. I promise you. All that bearish momentum is not for just random reason. See that? Zoom in right here. Oh, shoot. Okay. Sorry, guys. See that? Both of those days were bearish. But even on this one was engulfing. This daily candlestick was engulfing this previous candlestick anyways. So that's why you were seeing so much going on within that particular area. The 4 hour just happening faster. Hour. Go to the hour. Hour just happening faster. There's more going on. And this is how you just take advantage of these moves, man. You can see price is making a series of lower lows and lower highs. So many opportunities in this whole move. So many opportunities. They still going off of breaks and retests, okay? And this is the last thing I want to show you guys before I get off of here. Go back to this area. See? Same thing. They're just breaks and retests. Breaks and retests, breaks and retests, breaks and retests. See that? Break, retest. Another area. Breaks, retest. I can draw this one down to the wick. Came through. And this is straight. You could still got in after this close. Got in on a second candle. But price just had so much momentum at this particular area. This was just heavy. You definitely wanted to use confluence with this because just being able to see what the who were in the market, who was in the market at that particular time, knowing that having that daily candle, the higher time frame analysis to understand that sellers were heavy in the market, right? You could have made so much money on this just to have that bias on what was going on. But you have that bias, that directional bias, understand the trend, understand what the daily candlestick is doing. If bears, if sellers or buyers are in the market, weekly candlestick will tell you that as well too. Those support and resistance areas on those time frames are very, very important. If you haven't seen my video on that, definitely check that out. But you can see this is just a constant pattern, man. Even if you would have missed a move back here, I can go down to 15-minute. And now I'm just talking, but I just love to give so much value, man. You guys can tell I have a passion about this stuff. Like, I don't, you know what I'm saying? My videos don't just be a few minutes long. Like, I love this stuff, man. I have such a passion about it, and I'm just trying to help. See that? Came through right here. Because remember that area, you know what I'm saying? We couldn't really see that area that well in 30-minute, but you can see it on here. It gave you more information. Close like that, close, then it retested this level and came down. So you can see exactly what's going on. We had so many areas right there. And that was just strictly from price action. I didn't even incorporate no Fibonacci or anything like that. It's just literally for me understanding where to get in, like, into the market. So I still have to do a candlestick video for you guys, this is what I'm working on next. But this stuff is very, very useful. Price action and support and resistance is primary, man. You guys got to understand this. And confluence and higher time frames. Understanding, like, even if you gotta go into trading view and it's kind of back test, or, you know, replay from a certain location and play it just to see what happens, or how price reacts to that level, how price reacts to that support, or how price reacts to that resistance. You know, just do it over and over and over, replay it, and playing your trades out. And then that's how it'll help you understand where to get in the majority of the time. And that's what I used to do all the time. I used to be on my computer just testing it, back testing, visualizing me actually taking the trade in my live account. That's how I would do it. And that's how I got good at really analyzing the market. So, but other than that, man, that's all I'm going to say in this video. I already talked for 30 minutes long. If you liked it, man, go ahead. You already know to drop a like, drop a comment, and tell me more videos that you guys would like to see. I would love to put it out there. I don't mind it at all. I'm just trying to bring the most value and the most help to each and every person on my YouTube. This is more than just content, man. This is really just value overall and helping people's lives and blessing people's lives. So that's just what I'm trying to do, okay? So other than that, man, do that for me. Subscribe, turn that notification bell, and I will see you guys in the next video. Peace.